Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny and Bert. The Dividend Diplomats. Lanny, I had three stocks this week that all jumped over 10%. So I'm asking myself,
Wow.
should I use this as an opportunity to sell each one of these stocks
Yes.
and move the funds into either an ETF or a stock I am trying to load up on while it's discounted?
Smash that subscribe button, guys. Give us a thumbs up. Bert's got three big position stocks here worth well over $5,500 here that he's looking to exit and then possibly create some less risk, less volatile, but better growth, better income, guys. Bert, man, you know, we've all owned these stocks. I have owned these stocks. I still own two of the three of these stocks. Let's talk about that first stock here on the list.
Dupont, ticker symbol D. D. Love the ticker, though. Mad respect for the ticker on this one.
Gotta love it. No bias here, guys.
Yeah, none whatsoever. So DuPont jumped up after earnings. They had a strong earnings call.
Good job.
Yeah, this week they were up 10%. They're actually up 21% over the last 52 weeks, over 50% in the last five. The journey with DuPont's been incredibly frustrating, though, Lanny. I started by owning Dow. Dow acquired DuPont. Dow spun off three companies there. I think it was Dow, DuPont, and then I don't even remember.
Cortiva. Come on.
Oh yeah, it was Cortiva. You're right. I'm sorry, I forgot about Cortiva. But
How could you forget?
DuPont also has another spinoff pending. There's another DuPont spinoff that's going to close in November. So this
Hey,
company has just been,
a lot of cash. You might as well get the cash value, maybe.
yeah, it's been shredded up, split up four different times. After this spinoff, I own $1,100. I'm sitting at $109 loss. This position produces $20 of income.
That's
So
crazy. You're sitting in a loss.
yeah, I don't know how the Fidelity allocated those cost bases, but hey, I'll take the loss. I'm not going to complain about that.
I'll take the L. Bert says I'll get it. Just give me the
Yeah,
loss.
actually, make it a gain so if I sell it, I can get taxed. Please change that for me, Fidelity. Nothing would make me happier. So when I look at their metrics, though, that's what's interesting. They jumped up 10%. That PE is 19. Payout ratio is 34%, 6.5% 5-year dividend growth rate. And they've increased it every year since the whole spin-off, split off, whatever you want to call it, transaction. Their yield is 1.83%. So the metrics aren't terrible for DuPont. It's not a screaming sell, but it's not a screaming buy landing. I don't know if I'm going to be adding to this position anytime soon.
Yeah, I mean, if you only have $1,100 and you just don't see it happening, despite it being up 57% in 5 years, despite it beating the S&P 500 this year, and going pretty much neck and neck with the S&P 500 since last year. Again, it's not been a bad stock, but it's more of, is this a good time now that he's captured, almost shrank the entire unrealized loss? Again, 110 loss he's sitting on right now in this position, 1.8% yield. Dividend growth has been around 6.5%. So this sounds like VIG could almost be a hand for hand, tit for tat here because of it. VIG might have at or a better slightly yield with better dividend growth.
That's exactly what I was thinking here, too. It's almost the perfect candidate to swap because I've been buying that one share of VIG every single week. I think it's 1.7% yield and 7.5% growth.
And VIG's got, let's see, they're 56% in the last 5 years. So they're pretty much neck and neck there as well.
Yeah. And VIG is trading around 200. So if I sold the 1100 here, divide the 1108 divided by 203, that gives you a, that's what, 5.5 shares. That's about 5.5 shares of VIG. That's huge. And it's one less position to follow because DuPont would be out of my portfolio. So, hey, you don't get too many weeks of 10% gains out of DuPont. So this might be the perfect chance to take it, sell it, and then forget about it.
Take it, sell it, dump it, move on. Bert, I am digging it though.
Yeah. So number one. Number two, Lanny, SpartanNash. Ticker symbol SPTN. I sold my wife's SpartanNash that was about $800 several weeks ago and used it to buy some Mondelez and Google as part of like a larger transaction. I kept my position, which was the larger of the two SpartanNash positions. SpartanNash didn't have the best earnings release, but that didn't stop the stock from jumping up 11% over the last 52 weeks. It wasn't overly rosy, so now they're trading at $20 per share. My position is basically flat landing. I own $1,500 of SpartanNash. the loss of $16. This one produces $66 of dividend income because it has a 4.2% yield. So
Yeah,
metrics
pretty good
wise,
deal. Yeah.
yeah, 11 PE, 47% payout, 2.74% growth rate, 14 years of increases. It's a small company, $686 million market cap. Not really looking to add more to SpartanNash, so I'm asking myself, should I use it to get this week to get out?
Yeah, I mean, might want to consider it. Gosh, I wish it was like slightly. If you said like 3.75% yield, I would have said, yeah, just SCHD the hell out of it.
Yeah,
But
I mean,
another 10% growth, get it to 2250. If you typed in 2250 into the metrics here, I'm about to, that
yeah,
gets that'll, if you get 2250, it'll get you into that 3/8 yield.
yeah. This would pair well with a Hershey's, who is at like a 3.5% yield. Yeah. Hershey's jumped up to the 157 range, so they're a little higher now. Overall, though, I'm not running to sell SpartanNash, but if it keeps rising, Lanny, to your point, into the 22s.
I run to find those dividends. Gonna get dividends. That's too. So even with Dupont, or not Dow, with Dupont, again, I don't know why they're double D here. But that in Spartan, that is $2,600 in value. But there's still a third stock that actually popped up, not 10%, not 11%, actually 2 times that. They popped 22% this week, Bert.
Intel, ticker symbol INTC. The market is riding those Taiwan semiconductor foundry merger venture rumors everywhere. So there's renewed interest in Intel, that new government action, new potential spinoff, a lot of noise. Yes. Thank you. Please. Yeah, you're absolutely right, Lanny. I don't have 100 shares, so I couldn't write options on this one, but I would have definitely done that as if someone else I know follow their suit with it. Intel, 22% jump up. Their PE ratio is 48. They don't pay a dividend. This one to me is almost a no-brainer of getting rid of it. But I have it in 2 portfolios. I only have $845 in my individual portfolio at a $270 loss. My wife has $2,200 at a $2,000 loss. No income. So to me, Lanny, this is the obvious one. If I'm going to sell Intel, Google's right there with that 0.4% yield. This seems like a very good swap. I want to build Google to $5,000. I can at least take my $855 of Intel now that it's jumping, move it to Google, and then see what I want to do with my wife's position later. Or take the yield, move my wife's $2,200 and put that into SCHD.
Interesting. Man, yeah, that's a big, you got 20, yeah, like you said, $2,300 tax loss if you sold Intel. Obviously, you're doing this on the income front.
Yeah.
Man, $23.60. They were actually even higher than that. Weren't they like $24.50? It must have calmed down just at the end of the day on Friday.
Yeah, people realize that it's still Intel.
Sell.
Yeah.
There could have been some selling,
Yeah. Oh, I'm sure a lot of people realized what was going on in this. So.
Yeah, I mean, could you throw in, less than $100 and get to 100 shares and then write it up till $30 a share hits, or collect income that way, create your own yield?
Or just get rid of it, move it on to somewhere else. So that's
a Band-Aid. We'll quickly summarize, guys. This is $5,771 of market value, $2,392 long-term capital loss. And Bert would be able to take all of it. And at a 25% overall tax, let's use that, state, federal, that's $600 tax savings. And Bert can actually reinvest that $600 savings back in at 2% and, create another $12 in income as well from just the tax savings.
Yeah. So everyone, I'd love to hear your thoughts on this. What do you think of Dupont to VIG, SpartanNash to Hershey's, SCHD, VYM even, or Intel into Google, or picking up an SCHD or somewhere else to pick up some more dividend yield? Would love everybody's perspective on this. Throw it down there in that comment section.
Yeah, personally, I would love to also hear about this because, again, I might be in a similar boat here, guys.
Yeah. All right, everyone. Smash that subscribe button. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the gosh damn Dividend Diplomats. Over and out.